Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen, his website, thegoldanoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Janet Yellen, the head of the U.S. Fed, today said she's going to be pretty aggressive on pushing rate hikes ahead. Is that something that you anticipate will happen?
It's funny. I don't think it should, but I got a feeling they're going to do it anyway. If you go back in time and you look at bull markets in the equities market, and you look at the interest rates, right now, to me, in my opinion, the equities market is overextended. We're on the Trump bump. I think the bump is starting to fade. It's starting to weaken. I think we're very close to a bear market kicking in, and the Fed loves to just kind of start ramping up rates. And, it makes them look really bad, but who knows? It could be part of their theory of try and squeeze them up as much as they can before the bear market starts so that they can start cutting rates when, all hell breaks loose again. So, they're probably going to do it. I could see them, and you could probably argue also that maybe these bumping rates could hurt the equities market and create the next top. Either way, I think they're going to raise rates a little bit, give them some breathing space. I think it'll also help put the top in the equities market. And, I think we're very close. I think 2018 is going to be a massive pivotal year, and we're going to see a big bear market take place in equities, and we could see, depending on the type of crisis that takes place or whatever event kind of happens this time, every bear market has different reasoning for why we think prices fall. But whatever happens this time, the key is going to be what happens with precious metals and the safe haven plays, and is it going to crash the commodities market like it did in 08, 09, where everything pretty much fell, or is it going to be something where people actually are moving really heavily into those safe haven plays during the bear market crash because they're afraid of potential currency issues and defaults, and they want to move to physical assets and potentially even, it's not a physical asset, but I mean digital currencies. We've been seeing a massive run and flock to those, and that's still a tiny little market. So, the Fed, I think, if they raise rates, they're going to really help put the top in, and, there's nothing wrong with the stock market top. It's just a matter of being able to know what to do with your money to take advantage of it and protect your wealth during potentially the next 2 years when things could get pretty rough.
The problem with digital securities is because they just exist in your computer, they could be banned by governments. China's banned the creation of any new digital currencies there now, and they're one of the biggest users of digital currencies. Could there not be a worldwide effort to just squeeze these non-existent currency units right out of existence?
I don't know. I'm not sure how much what they could do or how they could track that exactly. It's kind of over my head, but I guess if China can do it, they kind of have a closed loop, I think, to the internet in some way, so it might be easier for them to do it. But it's a possibility. But people always find new ways to barter. It doesn't have to be called a digital currency. They can change it to anything they want. So there's always ways around every new rule, as you know.
Right, and the Chinese have always been creative in getting around currency controls way back, thousands of years ago when they didn't want them to export gold. Well, they just fed gold to their camels and then extracted it a week later.
I never heard that one, but
well, I don't know if it's true or not, but apparently that was one way because gold isn't digested.
Yeah, no kidding. Come out a little softer than it was.
Yeah, so people would be searched, are you taking gold out of the country? No, I'm not.
Exactly. No, but my camel weighs an extra 300 pounds this week.
We'll have more with Chris Vermeulen right after this.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Chris Vermeulen. Chris, if you're expecting a downturn in the markets, where do you expect people to be putting their money?
Yeah, well, I think they're going to flock to the natural safe havens, which are going to be bonds and precious metals. We usually see those rise, and along with utility stocks. The utility sector is kind of known as a very conservative safe haven play. Obviously, any type of utility, it's still required during no matter what the world is doing. Everybody needs hydro water. So we're going to see money flow into the bonds, utilities, precious metals. And, you know, we've seen all those safe havens have been selling off for about 2.5, 3 weeks. And just in the last couple trading days here, we've seen a pop in those prices. Money is starting to move into those. And that's an early warning sign that I think we're getting ready for another wave higher in safe havens. And we could see the equities market, which has been trading sideways for the last couple of weeks, it could actually break down and have a sharp down drop. And technically, based on cycle analysis, if things kind of unfold as I expect this week, pretty much any day here or this week, we should see a very sharp drop in the equities market and see a big spike in the VIX. And, you know, we've seen some interesting divergence on the VIX and a VIX ETF. And typically when the VIX is kind of starting to rise and we see these VIX ETFs, these leverage ones, the symbol is UVXY. When you see these leverage ones that actually have a large position in not only the front month, but has a heavier weighting to forward months going forward, usually we see the VIX index itself start to spike, but we don't see the big smart money kind of fearful of the market yet, of the VIX spiking. And we see these ETFs actually continue to decline in value while the VIX is starting to rise. And that's usually the early warning sign that we could see a very big spike in the VIX. And it's happening this week. We're starting to see it a little bit here where the ETF is dropping while the VIX is actually rising. And, you know, in a day or two, we could have a very big spike in the VIX and a big drop in the equities market. And it could take a couple days for that volatility and that panic selling in the market to dissipate. But then I think we'll be setting up for some pretty choppy market going forward in October that I think will continue to lead to the downside.
Do you think if there's a decline in the equity market, it's not going to be a sudden plunge like we saw on Black Friday 2 years ago on August 25th? Where, you know, it made a major correction in just 1 to 3 days. Is this one going to be what I call a step down, where it takes a step down, a slight step up, and then more of a step down, a more gradual progression instead of something sudden?
Well, I kind of feel like it's going to be what you're saying here is a big step. I think, you know, if you look at the leading kind of index, which is the NASDAQ, and you look back over the last year or so, we've seen several of these big steps to the downside. We're a big volume, massive drop down, and we've also seen that in the small cap stocks. So I do feel as though something like that is building, and I think it's very close and could happen any time. And I think this week in October is the time I think we could actually see it. It feels like the tension is building and that is about to happen. So I do feel like that's going to happen. I think that would trigger obviously a big spike in the VIX. And, you know, these steps that we're seeing to the downside, especially in the NASDAQ, all they are, they're early warning signs, and they're happening more frequent. We've seen 1, 2, 3, 4, 5, 6, 7, 8 of these happen this year already. And what those are big players, huge money, just slowly rotating big chunks of their capital out of the market, out of the hottest sectors, bit by bit. And eventually, when enough people start doing this, people start to become more panicked, and these big companies that need to start unloading, who see the darkness coming more or less in the equities market, they start to pick up speed, and they start to kind of race each other to unload. And eventually the market rolls over in a big way and starts its first big leg down. So, we could see about an 8% drop in the NASDAQ potentially over the next month or so, which would really trigger, change a lot of people's outlook. They go from bullish to a more kind of bearish outlook if you're a technical trader, and that could be the start of something much larger.
We'll have more with Chris Vermeulen right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, a lot of people say when transports take a beating, that's a good sign that the market's going to take a downturn. How have the transports been doing?
The transports have been on fire, actually. I think a huge chunk of this, or most of it actually, is because of what has happened with the hurricanes. It has destroyed a ton of goods. You could look at the shipping containers, some of the facilities in Florida and the ports, they just got creamed, and, they're talking hundreds, if not thousands of containers scattered. I think this has created a big demand for transportation, sea freight, which is a big, heavy kind of weighting in the index. So I think all this chaos that has been happening with the hurricanes has spurred a lot of, I think, extra kind of movement with shipping. And I think that's what we've kind of seen here. And it's the same with the home building sector. The hurricane has directly affected that, and we're seeing, obviously, home builders taking off and moving higher because there's, millions of homes or renos that are going to need to be done just in the southern United States and Texas. So huge pop because of that. And I think it's kind of misleading, that transportation sector kind of actually pushing to hit new highs here today. I think it's kind of a standout. It's not really telling us that money is moving in to the leading indicators. Just money right now is moving into where these kind of companies are going to profit and have the next good quarter earnings going forward.
Does that mean, will they go down as well, though? If the general market goes down, will it drag the transports with them?
Oh, for sure, yeah. Well, pretty much most sectors will all eventually collapse and roll over. Some of them will outperform better at the end of a bull market and hold up and continue to rise. Well, mostly the index in general is falling, and it's just the way it is. They're all off a little bit, but right now it's holding up really well, bucking the trend. But eventually a bear market will pretty much pull, 3 out of 4 stocks to the downside and continue to pull it until the bear market is over. So, this is just kind of I think a short-term kind of buck the trend type of move, but they will eventually follow suit, because once the market starts to go into contraction and the economy goes into contraction, transportation is definitely not needed nearly as much, and that sector will get hit very hard.
The CEO of Suncor says 100 years from now, they'll still be pulling oil out of the Alberta oil sands. Do you agree that there still will be a demand for oil even if there are more electric cars out there?
Are you saying 100 years from now?
Well, this is a quote from the CEO of Suncor. Of course, they're an oil sands company. You'd think that they'd be pretty bullish.
Yeah, exactly. Well, 100 years from now, I don't think we'll be using fossil fuels. Not like that. I think we'll be well beyond that. I've read a few articles on some new battery technology where they're saying you charge it once a year, and it's got tremendous amount of power stored in it, and things are going to change dramatically, and I can't see crude oil being a main source of energy. 10 years from now, I think it's going to be a real eye-opener to where we'll be technology-wise. And 100 years from now, I think crude oil will be out.
Well, Britain, Asia, Europe, I won't say Asia, but China, they've all set goals to eliminate the use of fossil fuels to power vehicles. That doesn't mean they're going to have electric airplanes or perhaps electric ships, but for getting people around day to day, they definitely want to get away from fossil fuel.
For sure, and vehicles are a huge thing, for sure, but I can definitely see fossil fuels being used in freight, sea, and air for a much longer period of time than vehicles, because they require a lot more power, and that also has to stay consistent for a very long time. Batteries get weaker, tired, shorter-lived at this point. So, yeah, big, heavy loads require, I think, fossil fuels at this point. But quick transport, electric, is definitely getting squeezed and forced into play here.
Chris, anything else that you think we should be keeping an eye on right now?
The only thing I've been kind of looking at the last week or so is really just the Toronto Stock Exchange. It's had a nice little bump and rally, a good part of it because of crude oil moving up. But during the late stages of a bull market in equities, we tend to see commodity-rich indexes like the Toronto Stock Exchange start to perform and outperform, and we've seen that over the last 2 weeks. Toronto Stock Exchange has kind of been up almost every day, and it's getting up, testing some significant highs, very similar to a price pattern that we saw back in 2008, and I think it's a sign that we could be very close, months away from an actual bear market or an actual top being put in place in the U.S. equities market. It may still take months and months for the U.S. markets to actually form a top and then finally break and fall down and have a big collapse to initiate the start of the bear market. But I think we could be near some very multi-year highs here in the equities market, the U.S. market going forward. So I'm keeping my eye on the Toronto Stock Exchange to continue to outperform and hold up really well going forward here.
Chris, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.